Hi everyone, welcome back to Acorn FX. Today we'll be discussing chart types. Just as a very quick recap, just looking at what is the FX market. It's essentially one currency exchanged for another. It's the largest and most liquid financial market with over $5 million traded per day, and it operates 24 hours a day, 5 days a week. The advances in technology mean that with the majority of brokers, you can trade from most of your devices, whether that's PCs, tablets, smartphones. Personally, my preference is always a PC because with that bigger screen, you can just scrutinize things in much more detail. You have flexible trade sizes from just £1, and you can also use a demo account to hone your skills and strategies without using your own funds. Right, let's get into the different chart types available. First one, line charts. It's a relatively simple chart. What it plots is the difference from one closing price to another. It's a great chart for beginners as it's very simple to read. For data lovers and experienced traders, it may not be as useful, but the key to the line charts always lies in its simplicity. Bar charts. Fortunately, it's not a chance for us to watch the charts at a bar. It's just it's a little bit more complex than the simple line graphs. And what it does, it shows us the opening and closing of the prices. In this example, we can see the high and low as suggested by the highest and lowest points on the line, and the marker on the left indicates where the price opened and the marker on the right where it closes. And our third is candlesticks. These are very similar to bar charts, but is in a more aesthetic format. Similar to bar charts, the high and low points are denoted by the high and low points on the candlestick, more commonly known as the wick. The body of the candle shows us the difference between the opening and closing prices. If the closing price is higher than the opening price, so the price is going up, then the block will be green. If the closing price is lower than the opening price, so the price is going down, then the block will be in red. This candlesticks are very useful because it shows the conviction of the movement, whereas the wick shows you the overextended emotions that likely won't hold. If the body takes up the majority of the candle, then we can look at it as a trend candle because the price closed near where the ultimate reach of the price was. If the wick takes up most of the price, then we can see it's a warning light as to indecision in the market. And the winner is, drumroll please, the candlesticks. For the following reasons: they are easy to interpret, and therefore a good place for beginners to switch to once they have gained a little bit of FX experience. I find them personally very easy to use, especially as you can immediately spot any trends in the bearish or bullish markets. They have cool names for the different visibility factors, such as shooting stars, which makes it quite easy to remember the names, what they mean, and also to spot them trends. And they're very useful in identifying any market turning points. It's always very useful. So how do you get started today? Well, that's easy. What you need to do is just make that decision, start right away, no more ifs or buts. Your time starts now. And thank you very much for listening. This is Acorn FX, and our little tutorial about chart types.